Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Hump Day, Hump Day, Hump Day. August 14th, we got a couple economic news releases. Actually, it's basically the same thing. We got the producer price index for the month of July. This is the wholesale index, and this is the headline number. So I say the same thing because we have the core after this. So again, this is the inflation number on the wholesale side. We had a 0.8% growth in the month of June. We figured July was going to summer down a little bit to 0.3%, and it came in at zero. Now the core, what the difference is that we strip out the food and energy, which creates the volatility in the index, and this is what the Fed basically measures in terms of inflation on the wholesale side. Now this is important, but not the most important because we got the CPI coming out tomorrow, and then also the personal consumption expenditure, which is the PCE index. Those are the two most important inflation numbers because even though there might be inflationary costs or are higher costs associated on the wholesale level, they're not always passed on to the consumer, and that's what we always look at is what the consumer is paying, the overall expenses out there. And that's why they have a little bit more weight to their numbers. So we had a 0.2% increase in the month of June. The forecast was to continue that, and actually it slowed down to 0.1%. So there is concern, obviously, for deflation numbers. This is why these indexes are going to be very important, especially tomorrow with the CPI report coming up. Tomorrow will be probably the biggest day we've had this week because we'll have the weekly jobless claims. We'll have the Philadelphia Fed Index, Empire State Index, which are the manufacturing data coming out of New York as well as Philadelphia, and of course the CPI inflation numbers. So those will be big numbers to watch out for tomorrow. So let's jump over the headline news. And currently the stock market's down right now. Now, even though there's news that came in from the Eurozone, which came out with better GDP data, they're seeing some positive data that was coming out previously. So that's why the stock market's not reacted as strongly in regards to that. Now, our stock market is, some earnings reports came out like Macy's didn't do so well. They're going to be looking at Walmart down the line. So their concern is, some of this talk about the tapering of the quantitative easing that's being mentioned by some of the Fed members. Their concern is that if we pull back, are we going to be able to sustain ourselves long term? And with those retail stores that are big, important ones like Macy's and a Walmart, that data could show us that maybe our economy is not strong enough to survive this, and especially with the spike in the interest rates, the housing markets, which is kind of leading the GDP on their improvement, maybe that will pull back and slow things down as well. So that's the concern, and they're kind of dwelling on that. So later today, we have one of the Fed members, Bullard, will be speaking later today, and of course they're going to be looking for hints of the Fed's, when the timing of this bond tapering or this purchase tapering on the quantitative easing or the purchases. So this is something that's going to be played out and will be up until September because a lot of investors were forecasting September, but then you had a couple of people saying, well, it may not be because we may not have enough data coming out to really make a final decision. But it's also not to say that they buy fewer. Let's say, for example, we've been buying 85 billion per month. They may buy less than that. Again, tapering off. All right, so those things are kind of playing out. So there's not a whole lot on the stock market right now. The stock market was down almost 100 today. It was in the 90s. So let's go see what the bond market is doing. Slight improvement, not great. We had a bad day yesterday. Actually, this whole week so far has been pretty bad. It was closed down to 99.97. We're currently up 100.09, which means we're up approximately 8 basis points. So sorry about that. So not too good of a day so far today. I'm sorry, 12 basis points. My bad. So not a good day so far in terms of bond pricing, but a slight improvement from where we left off yesterday. Again, we're trying to see, hopefully we can close that gap that we had that started off from Monday to Tuesday. If we can close that, that could help us out, but we're still within a trading range we've been kind of experiencing between the 101 level and the 100 level. So that 1% range, and what that basically means, that 100, the difference between 100 and 101 means that's 1 point in the pricing. So if you haven't been hearing me, basically if let's say interest rate at 4%. On the day we were at 101 and it was at no point and the market drops down to 100, that means that no point loan now costs you 1 point. So that's a difference in the pricing, and it could affect interest rates as much as about quarter to 3/8, and depends on the investor pricing. So give you an idea what the interest rates will look like. All right. Thanks for watching. I hope you guys have a wonderful day. We'll see you guys tomorrow. Again, stay tuned tomorrow. It's going to be a very volatile day. This could be a big move that we are looking for or could hurt us. All right. Have a great day.